Welcome, welcome, welcome. We've got Canada Startup and Lead Pedal Radio. Hi, Bill Wilson. How are you today?
Doing well, thanks, Dave. Looking forward to another great session.
And this is Dave Rogers, and we get together every Tuesday at 6:30 p.m. Eastern Standard Time to talk about investing, to talk about personal development, and to talk about anything that middle-aged men might be interested in. Would that be accurate, Bill? Or are we late in the age now? So
the age of enlightenment.
Well, I'm not sure about enlightenment. We're actually probably the opposite in heavyment, as we put on extra pounds and don't necessarily have the metabolism to let it go. Yet this July is a spike time for the financial markets. And even though today was quite volatile, we had some record-setting trends. In fact, one of the biggest companies in the world, Amazon, hit a brand new high today. And we've talked about Amazon in the past. In the last year, it's gone from $2,871 to today, $3,685 US per share. Last week, their founding CEO, Jeff Bezos, retired, and their new CEO took over today. So in what ways—
I saw some stuff about that, yeah.
In what ways do you see that Amazon has changed business?
Oh, wow. Well, definitely with the pandemic, I think they've just, not that I know the inner workings, but the efficiency must have just gone skyrocketing for them to be able to do all the deliveries. I mean, I don't think there was a day, I don't think there have been many days where there hasn't been an Amazon delivery somewhere on our street. You know, everywhere you look, you see the box with the little, what is it, a smiley face or something like that?
It looks like a bit of a knockout of the swoosh from Nike.
Of the swoosh, right? Yeah, yeah. So that would be one thing I think would be a thing. And then obviously the other side of the fact, people having more the company has definitely had to up their game, I guess, as far as customer service and deliverables, for people to have the trust that they have to order so much from them. And then, you know, looking quality of product. I mean, the list is huge for what they've been able to do in this short period of time. Just proving that, you know, when push comes to shove, you can really do it. Whereas normally it might have taken, you know, maybe 5-10 years to accomplish what's been going on.
That's right. This past year has been almost a 7 to 8 year acceleration in their business.
Yes.
They've totally disrupted the entire retail business chain globally. They're one-day delivery right now, and they're often under promising and over delivering. They say it might take 3 days. Quite often, I imagine you're experiencing one-day delivery. It's just quite a shock to see what they're able to do. They've got a couple of different areas on one side that we might not see very often, and that's their whole technology platform. Is the Amazon Web Services, where so many businesses now use it for storage and use it to run their business.
Yes.
Then they have the retail that is, again, just allowing you to go online, buy something, get it delivered to your house in the next 2 days. And then they've got the Prime, which now it's getting into providing us with all of these engaging videos and movies, and again, at a price tag that is so easy to do, because all you have to do is buy a few products and that comes free, or you upgrade to that and your products are reduced prices. So it's really captured the interest and the curiosity and the buying habits. It's shifted the buying habits, particularly in North America.
Yeah, it's almost like, sorry, go ahead.
No, go ahead.
Oh, okay. It's almost like, you know, yes, definitely the disruption, and it's almost like they've disrupted retail to become a subscription service. And
you got to subscribe to buy all their products. So when you see
Prime,
when you see that price tag of buying a share today at $3,675 US, what's your reaction?
Wow. You know, I guess for somebody that's a newbie and beginning at something like this, it's almost something to scare me away from investing. So I guess, you know, my question would be, as a somebody that's, you know, relatively new doing something like this, what would be one way that I'd be able to acquire something like that without having to? Well, I guess what would be the way that I could acquire anything to start?
Well, that's the tricky thing about Amazon's price right now, and it is limiting the number of people that can go and buy a share. For
Right.
somebody to have a 5,000 Canadian dollar equivalent as an investment in one share, it's going to scare people away. And it's funny because it has worked for them in many ways because there's not as much short interest in Amazon. Amazon was not a very profitable business for a decade. And so they've been able to grow and invest and not have to be focused on many companies' focus, which is quarterly profits and having to adjust every quarter. Bezos really went out there with a 8 to 10 to 15-year plan and worked the plan. And so it is one of those things that I did make my first investment, I think around $2,800, but it took a lot of research and a lot of comfort to buy my first 1 or 2 shares. And I've been accumulating it over the last year and a half, and now have a pretty sizable position that does definitely get me to stay awake about looking at Amazon. Yet that question that you asked was to start looking for what other alternatives. And that's what today's chat is about, is some alternatives if you're interested in the retail disruptors. And we can look around the globe. Yet we don't have to look that far from Amazon. If we look at Canada, you've actually been working with one of these companies, and what would that be?
Yeah, oh, Shopify. Yeah.
And see, Shopify is also just destroying a lot of retailers, but enabling a whole bunch of other retailers. And so,
Yes.
like you've experienced, they're providing a whole front end. They're providing almost like a shop for you with all of the interworkings, the finance, the inventory, the customer service, all connected to your online business. And the last year for Shopify has also seen their stock go from $8.39 to $15.52. And today it was hovering around record highs at $15.38 US dollars.
Wow.
Which again, I've been able to bring down the price for you. So that's half. Yeah. Yet again, one of the challenges for you could be, because if you really like it, is to maybe start saving to buy a share of Shopify. Our friends in the States have an advantage because they do have partial shares. So somebody who might be working with Robinhood, for instance, as their broker, can buy a 10% or a 20%. So they can buy a partial share. And that's a luxury that we don't have here in Canada. But many of our friends in the States, particularly through Robinhood, are able, Weeble's another one, a platform that allows them to buy partial shares. And so for you, if you target that Shopify as an investment, save about $2,000 and maybe put the money into it. Yet it would be after you do more research, and that's what we're suggesting. We're not financial advisors. We're giving suggestions on ideas for people to go and do some research and possibly have an investment in a major disruptor or 2 or 3 or 4, because these are all different companies that have great platforms. Let's share a little bit your perspective on the way that Shopify is disrupting, but also enabling entrepreneurs.
Well, I like the way definitely they're really pushing in the whole online experience, but they're allowing the shop owner to be able to build a big shop without having to deal with bricks and mortar. So you're saving a huge amount there in your rent and all the other incidentals or ongoing fees and expenses. And you can do things wherever you want, whenever you want, which is another great thing. The training they have, I think, is probably a disruptor. It's incredible. They teach you every little aspect, from starting your website to building your business to marketing to customer service. That has been, I've been very impressed with on that side. And then the other side of the coin, as more people are being comfortable with the online marketing. Sorry about that. As more people they're comfortable with the online experience, a a lot of the Shopify stores do very well. So yeah, it's really good that way.
Well, that's what's been great for your experience is that while you've only been at it for a few months, you've already been able to record some record sales from the online, been able to
Yeah.
engage clients at a whole new level, been able to experiment and have some campaigns. And it's been absolutely fantastic for you and your team using Shopify. So if folks watching today have ever thought about starting a business and want to look at an online platform, check out Shopify. They are a phenomenal alternative to what traditional retail is. And they're providing entrepreneurs with the tools to really enable your global business, or at least your North American business.
Yeah. I guess that's another part too about the enabling. We haven't really researched it a huge amount yet, but they do have financing options for people as they start. So they're there to help you be a success. They're there to build you along, and you know it's a great feeling when you have all that support.
In fact, their financing arm, it is to finance inventory, it's to finance receivables. It's an opportunity that the CEO was recently interviewed, and he talked about the first $1 million you make off of Shopify, he isn't going to be charging fees. And so they've been making these phenomenal offers and opportunities to really develop some heroes of the Shopify platform. So check it out, folks. If you've got any questions for us, Bill's been doing quite a bit of research on it. We may explore a venture on it together, yet we are involved in one sort of together with a wonderful lady entrepreneur that we're working with. So let's again, $1,800 might also be pretty expensive. So let's go to the next level, Bill. The companies
So yeah, what else do we got here?
The companies that are doing this in Asia, the big leader in China is Alibaba. And the one in Southeast Asia is a company called SE. SE is the ticker. And C trades between the past year between 101 to 297. And today it's at 275 US dollars. Yet the one today that is really of interest for you to check out, and any of our listeners, this might be the big opportunity, is Alibaba. It's been beaten down. It was 204 to 319 for this year. Yet today it closed at 211. And it's got caught up in a lot of the controversy with the Chinese government right now. There was some IPOs that were recently done that they're a part owner of, yet the IPO, the government didn't give their full approval. And so they locked up the app of the company that did the IPO. And Bubba was a recipient of that also. So if there's one timely tip, is to check out Alibaba. I wouldn't be that upset, Bill, if in the next couple of days, if you got your first share of Alibaba. It's considered to be actually stronger than Amazon if you look strictly at the numbers. Yet it is something for you to investigate. And since you are familiar with Shopify and we've talked about Amazon, Alibaba might be the one to check. Yet the one that flies under the radar, it's very, very popular, is SE. And that's out of Singapore. And they're also they're growing at a fast pace. And they're providing many of the services that Shopify provides.
Oh, okay. That's cool.
Any questions on Asia? Because this is Baba has been dominating in China, and it is.
I've heard of Alibaba. Yeah,
Alibaba was going to do. They got a great financing arm. They have a great leader in Mr. Jack Ma. Yet they have had some issues with the Chinese government in the past year, which has basically delivered an opportunity for investors to get in at a good price. You think about the reduction from 204 from 319, and today you can pick up perhaps one or two. Yet it's a stock that I've been tracking, and I'm actually a big fan of what Alibaba is doing.
Yeah, no, it's very interesting, and I guess that's the thing to get used to. You know, like that whole North American thing, like. The whole capabilities, I guess, that I'm seeing for this is that, you know what, we can look at we can look at the whole world when we're looking for our stocks. and to research that sort of thing. Right now, I mean, just as a beginner, I'm a Canadian. I want to focus on Canada. But this is really awesome when you think, hey, there's something across the world there that's really strong, that would be worth investigating. And it just makes the whole concept of the investing thing so exciting, because you get to research all these cool companies and learn so much about it. I knew a bit about Alibaba, but I've never heard of SE or anything like that. So this is cool, something more to research and learn about.
Alibaba's co-founder is Mr. Tsai, and he is Canadian. I think he's originally from either Hong Kong or Taiwan, and he recently bought the Brooklyn Nets. And
oh,
so
right on.
He's
okay.
And so he's very active in sports. His shareholding is quite significant. I think worth over $10 billion of Alibaba shares. And one of the things that was in the news this week is that both Jack and Joe are going to pledge their shares so that they can more actively utilize the money, because both of them are sitting on over $10 billion worth of shares that they really can't do anything unless they give it or lend it to a institution like Goldman Sachs or JP Morgan, and then they can borrow against that money and then utilize that money. That was another hiccup for the shares, because that means those shares can be readily used to short the stock, which will put downward pressure on it also. So it's a bit of a double-edged sword, yet it is something that goes on very much in finance, and something that we'll talk about in the future as leverage becomes something that you might explore, or any of our listeners might ask about leverage in the way that that's utilized. But it's very exciting times for Alibaba. Under pressure, quite an interesting opportunity maybe for you to check out your monthly investment, since we've been talking about let's have a monthly investment, whether it's a share of Tesla each month, or perhaps MicroStrategies or Alibaba or FIE, anything that you might be looking to invest in on a monthly basis. Let's go to another share that is in another part of the world, because we've talked about traveling, and the one that's most famous in Latin America is a company called Mercado Libre. Its ticker is MELI, and it's gone from $940 to $2,020 in the past year, and today it's closing at $1,553. It is really doing what Amazon's doing, what Alibaba's doing. They're doing it primarily in Latin America. So in South America and Mexico and the Spanish and Portuguese speaking nations. And it's a strong company. And at that price tag, you might not want to dabble with it, yet it is something that when we were looking at the way that the stocks were trading, it was on a big run up last year as it went from 940 to 2000. And then it came back down to about 1250. Some friends bought it at that level and are quite happy at 1500. I'm sitting with a couple of shares that I'm trying to decide whether to sell that and put it in something else. And I continue to do my analysis on that one. What's your view on Latin America? Is it a place that you'd like to travel or visit or potentially have some exposure to?
That one, I don't really rank that too high on my list. I'm just not totally confident.
Actually,
a gut feeling.
From a risk perspective, it might not have the risk reward, because again, when you're looking at Amazon, probably not a lot of risk. Shopify, probably not a lot of risk. Again, Asia, a little more risk, yet perhaps a better return also. So Latin America definitely has a country and geographical risk premium. And so if you're not being compensated or you don't have the confidence, it's probably best not to put some money into it. Yet I did have a quote, but it didn't come up. So let's go to the next region that is quite fascinating when we're talking about disruptors in the retail network, is a company in Africa.
Okay.
Called JUMIA.
JUMIA, okay.
And JUMIA in the past year had a range of $5 to $69.89. Today it closed at 27.
Okay.
And what's quite interesting about JUMIA from my perspective is that many of the basketball stars who got very involved in investing in stocks as venture capitalists, particularly the folks who were playing for the Golden State Warriors, which is right near Silicon Valley. Quite a few of the players got very involved in venture capital. And this was one of their favorite stocks to pick. And they were part of the run-up of it last year when it went from 5 to 10 to 20 to 40, all the way up to $70. JUMIA is providing many of the services of Amazon and Alibaba to Africa, the continent of Africa. So a little bit more risky. I actually have a few of those shares, yet I'm in the red with those one right now. And I haven't decided whether to dollar cost average or to even get out of that position.
Gotcha.
So when you think of that particular one, you might have any questions on the world that we're seeing today according to retail, disruptive retail, and opportunities that might be presenting to you today?
Yeah, that one I would really have to dig deep to even think about it. That whole trust thing. Excuse me. The farther it gets away from home, to me, it's like, okay, got to really think about that. I'd rather have things a little more within, possibly within arm's reach, but also I think more than anything, having that trust level for what they're going to do, how they're going to take care of both the employees and the customers, that sort of thing, right? So, I mean, it sounds interesting, the fact that it's priced reasonably low, but you know, what's going to happen long term with it? I don't know if I'd be prepared for a risk like that one just yet.
Very good. This quote's picked for you today. Know what you own and know why you own it. And the gentleman who talks about this is Peter Lynch. And he would be somebody that I would recommend anyone who would like to learn more about how to pick stocks, how to invest for the long run. Peter Lynch is one of the legends. He was probably the most well-known investor before Warren Buffett became super famous. So Peter Lynch, I definitely would recommend you or any of our listeners today to take a peek at the way that Peter Lynch picked stocks. One of his most famous books was One Up on Wall Street. And it was a book that I read when I was in university. He managed one of the largest funds for a decade. And he really had a fantastic approach to teaching people how to walk around and notice what's popular, to walk around and notice what was interesting, and to be curious in investing, and then doing some pretty rigorous analysis, yet really being able to live investing by walking around.
That's cool.
Yeah. So when you're thinking of the month of July, Bill, what questions might be coming up? We just had July 4th. We had July 1st, a situation in Canada where we had our celebration that was somewhat muted by the invitation to reflect on what Canada means, what Canada is doing, as we listened and watched in the States to their celebration. What would be something to focus on? It could be investing, or it could be any other area that is of interest for you for the month of July.
Yeah, actually, today's been really interesting with the different stocks and that. I would definitely like to think about the investing, but would these be seasonal? Like, is the summer a good time to consider purchasing, or is it something to take your time, do your research over the summer, learn more about the company, and look more towards potentially the fall because there might be a dip or something like that? What would these stocks, where would these stocks fall in something like that?
Great question, Bill. The idea here is, yes, there is a seasonality. If you go and do some research on different months, the returns per month. In fact, July, if you look at the last decade, July is the best return month of any month.
Oh, wow.
So if I was to be encouraging you, I would be saying, go pick one of those and put some money in, because it's likely it will go up in July. That's what the
Okay.
statistics suggest. Later in the year, September, October, we will have volatility. It traditionally is, October is a month where there's a correction or a big dip. So have some powder ready to make an investment in that month. So that would be the two tips on, is there a seasonality? Yes, there is a seasonality. Markets are emotional and they do have a rhythm and they have a cycle. And there's some people who truly believe in technical analysis. Technical analysis, you look at the charts. You don't even have to know what the stock is. You don't have to do fundamental analysis. There's a whole spectrum of investors who purely look at the charts because they're focused on the human emotion. When it gets up, people get euphoric, we get new people in, push it up higher, and then it crashes because that's what tends to happen from the psyche, the emotional response of human beings.
Right.
That is definitely practiced by, I would say, about 20, maybe 15% of the market. The other component is fundamental analysis. That would be really looking at all the financials, knowing when the next reports are, looking at the forecast, looking to being able to project what the company's going to make, going to earn, going to have as expenses. And they're really very clinical on the financial and fundamental rigor. And what I guess I'm inviting you to do is to bring both of those together, allow yourself to learn, yet also allow yourself to have some skin in the game so that you learn with a little bit more energy, emotion, and perhaps a little bit of fear and a little bit of excitement, yet finding the way to walk your middle path, which is going to allow you to invest and, again, put something into the market. Yet when it drops, if you really have conviction, you don't run away from it. You actually look to buy more. Right. And some of the stocks that we talked about today might suit you to do that. So if in the next year you'd like to, say, have a $2,000 stake in one of those companies, you could go out this month and maybe buy one or two and start dollar cost averaging. And that might be a good approach for a beginner. I am a big fan of dollar cost averaging. There's some people who don't like it, yet over several years, if you're readily investing or dividend reinvesting, you will probably have a position that will allow you to accumulate some wealth. Yeah,
I agree with you on the dollar cost averaging. Just keep the line as close to flat as possible. And I think in the if it's more of a long-term, I guess, strategy. But I want to be in here for the long term, not the short term.
Well, I'm thrilled to be able to share it today because today was a euphoric day in many ways that Amazon had a huge breakout. This breakout was very significant, 5% on a day move of a stock that's over $3,000. Everyone was talking about it. And then we had its brother in China, Alibaba, get punched down. And so there's a huge differential now between those. And many people do think that Alibaba is of higher value of Amazon because of the system that they have in China. Shopify continues to surprise on their deliverables. They're going to be announcing their financials this month, and they just continue to create great rapport and relationship with their customer base. This company, CSE, out of Singapore, is continuing to expand very effectively, bringing in the financing idea, bringing in the ways that they can really work closely with their customers.
What did you say the guy's name that owns that?
Alibaba. Actually, it was Alibaba that I mentioned. It was Jack Ma and Joe Tsai. And Joe Tsai is actually a Canadian. Yeah, TSAI.
And he's part of Alibaba.
He's part of Alibaba, and he owns the Brooklyn Nets. Yes.
Okay. Yes. So I think that's the same guy that went in with Gretzky and Steve Nash, and I think there's a fourth, and they bought a lacrosse team just recently.
You might be correct.
I think they did.
Yes, he does. Joe Tsai buys Las Vegas lacrosse expansion team.
Yeah, so it's him, Gretzky, I think Steve Nash, and I think there's a fourth.
Right.
So I'd be partial to that one now.
Well, it's a great idea. That again, he is quite a fascinating gentleman, and I've just started to research him a little bit, and He actually played lacrosse at Yale.
Okay.
Yeah, and so quite a fantastic story. In fact, the way he got involved in Alibaba and helped grow that company to the degree that they're at now.
Did you play lacrosse against him?
I never played against him. No. Oh, it's Steve Nash, golfer Dustin Johnson, and Joe Tsai are going to start the team in Las Vegas lacrosse.
Right. Okay. So yeah, that's Johnson is Gretzky's future son-in-law. So
yes.
There's all your tie-ins. Okay.
Yes.
Cool.
And Joe Tsai was born in Taiwan, educated in the States, and is a naturalized Canadian.
Oh, cool.
Yes. So definitely, again, I would as a particular task, maybe for us to follow up in the next week or so, take a look at Alibaba, watch a couple of YouTube videos, and get a little comfort. And again, it's a nice entry point right now. I've bought it probably about 5 different times at different points over the last couple of years, and I'm quite active with it. Of an investment that might give you not only a monthly return, yet something you probably could own for a long time.
Oh, nice.
It's good one to do a little research. And if you got any questions, definitely ask me, and we can even talk to anyone that our listeners who might have some views on Alibaba also. And then we went into Latin America, which I tend to agree with you. There's a little more risk. The reason why, risk return. Yet in this case, Alibaba has been so beaten up. The risk return on Alibaba right now is actually quite attractive. And then Africa, which again, as a geography diversification strategy, some investors would like to have some exposure to each of the continents. And JUMIA is considered one of the ones that will deliver outsized returns for the African market, and is also enabling entrepreneurs in Africa. Right. So with that, any last little questions or thoughts or ideas that you might want to explore for the month of July?
I think I'm definitely going to check into these ones that we've talked about today. So, I mean, I'm sort of in that. I've got some skin, so to speak, in that space. So research a little more, gain a better understanding, and maybe, try one of those out just to see what happens. I'm looking more towards maybe the Alibaba and maybe the SE, checking them out more than the other ones. So,
well, very good. SE has been one that it would be good to check it out and even go onto their platform. What's fascinating for you, since you've used the Shopify platform, what could be almost a role that you could check out is you could go on to each of their websites and just see how it moves, how it maneuvers, and see the strengths and weaknesses compared to Shopify. I have a feeling Shopify has done a phenomenal job in storytelling the successes of their people, case studies. And again, as an entrepreneur, that's what's really great about studying great companies, is that we can learn so much from them. If you go and read the first 5 pages of Shopify's financial statements, you'll see what their 5-year plans are. So you as an entrepreneur can even cut and paste part of it, because they're companies that have grown and are growing and can foresee what are some of the future trends for you and I who might be starting out, or some of our friends who are watching us today or listening. They might be able to learn a whole lot just by reading 5 pages of the financial reports from some of these leading companies.
That sounds, that would be cool.
And throw that in with a little, people invite you to check out Peter Lynch as somebody you can Google, somebody you can YouTube, watch some of his videos. His approach to investing is legendary, and it would be really great if that assists you. And then if you come back and ask us any questions or have any ideas for future shows, that would be great. What
other books does he have that would be good to read?
I think the one that Beating the Street, and then One Up on Wall Street are the 2 that were extremely popular. And then he has another one called Learn to Earn. And those would be the ones that, if you can get, they're not easy reads. I will warn you. They are not easy reads. It's very theoretical. He's got a lot of formulas. When the one I had with little print, with lots of letters, the Greek letters in his formulas. So it wasn't a fun book to read. It was quite rigorous in his analysis. So it's a challenge. And if you skip over some of those parts and just finish it, it would be a good goal and a good strategy.
Right on.
Yeah. All right. Well, let's. Unless you have any other questions or any thoughts for the month of July, and
no, this is great, man. This will keep me busy for the rest of the month.
All right. Well, let's look forward to an idea, back and forth on some investment ideas. We'll see what unfolds. I'm actually pretty optimistic about the month of July. Today, the market was down for me because the financials got punched in the nose, and I had lots of red all over my screens. Yet there's a couple of trades that we have on right now that we're pretty excited about. And Alibaba is one of the trades that
cool.
I put on some options trades and some leaps and some covered calls. So I am playing quite a bit with Alibaba right now, and happy to talk about that in future shows with you also. Oh,
that would be cool. Yeah. Just all those last things you mentioned there, that could be a whole show, because I kind of lost you there.
Yes, that's the derivatives. When you own the shares, you can then go into options, which gives you the option to buy 100 shares or the option to sell shares. And then leaps are considered 1 year or 2 year options, which allows you to leverage even more. It tends to be a zero-sum game. So you are having a bet, and that bet can often lead to losing everything. Yet if you figure out some different hedging strategies, you're able to have more sizable positions with measurable risk. Yet with that risk, of course, can come returns and losses.
Right.
But yes, we can talk about that in the future, especially if you get interested in perhaps any one of the stocks that you're looking at, and then we could talk about 4 ways to invest in it, and we can talk about just buying the shares, buying the options, buying the shares and the options, writing covered calls. And so there's different ways for us to have different exposure and relationships with each of the companies.
Wow. Okay. Sounds like fun.
All right. Well, with that, thank you very much, Bill. You have an absolutely great month ahead. And thank you to our listeners and Lead Pedal Radio for sponsorship and Canada Startup. And check us out on Continual Shift, or check us out on Lead Pedal Radio. Thanks very much, Bill.
Thanks, Dave.